What's going on, Apes the Ape Army? My name is Tyler and welcome back to the channel. We are going to go over a lot in this video. The reason why the stock market is down so bad today, my reasoning as to why I do think the stock market is heading for a crash and correction, and we are probably beginning to see the signs of this, as well as we're going to go over, there is some talk about a negative beta on AMC, which means that AMC will go up as the stock market goes down. But regardless of that, there is no telltale proof. You can't look up a beta of AMC that is accurate, that can tell you 100% this is what is going on. But as we have seen over the past couple of weeks, when the stock market is down a lot in any given day, AMC does tend to have a positive day. So I do think that beta situation is the truth, but we are going to also be talking about the double-edged sword effect and what I do think will cause the AMC short squeeze. Now, if you guys have been subscribed to this channel for a while, you know exactly what the double-edged sword effect is, but I think it's very important to spread this information as many times as it does need to be spread, so apes are well aware of what is going on and what I do expect to happen with the stock, because I think there is so much more on the table for the AMC short squeeze and everybody needs to be made aware about this. I have not seen a single YouTube video about this, so people need to know. So with that being said, make sure to hit that like button, consider subscribing to the channel, and comment down below. Let me know what you think about my thoughts about this, and keep in mind, I'm not a financial advisor, not a financial planner or your dad, so always do your own due diligence. Don't trade based off of anything that is said in this video or any YouTube video for that matter. But getting straight into it, guys, let's talk about the overall double-edged sword effect, and that is very important. Imagine you're a hedge fund or institution. You have long positions in stock, you have short positions in stock. While these hedge funds and institutions that are short in AMC, they also have long positions in the overall stock market. Now think about your overall margin account. When your value goes down in your account, you have to deposit more money, buy more stock, or sell out of your stocks and cover your margin. So when it does come down to the hedge funds, institutions that are short in AMC stock, they're going to be losing money on their long positions when the overall market comes down, losing on that collateral to be able to stay in their AMC short positions. But because a short position has unlimited risk, that does mean these hedgies will want to cover their AMC short positions, get out of that before liquidating all of their long positions. So that is the double-edged sword effect in a nutshell, what is going to happen, and I do think this will be the biggest driving factor of the AMC short squeeze. It only makes sense. If you were going to put your money on one thing, I would put all of my money on this one thing. That is the only thing that will ultimately cause the AMC short squeeze, in my opinion. There will also be other minor factors, but it is going to be this one major thing. Now, let's talk about what is going on in the stock market. What did happen today? We're down 0.75% on the overall S&P. The NASDAQ and the Dow were down pretty much around the same. And we are actually seeing the S&P starting to curl down, looking like it is heading for a correction in the near-term future. But we do have some information for today that we do need to go over as well, and that is the Rona. Now, I am not here to get political with you guys or argue the Rona if it's legit or not. People have their own opinions, but simply go over why this is a bad thing for the market. Because if you guys remember, if you've been investing throughout all of 2020, there was obviously that crash in March that lasted about a month. We recovered in the following next month or two, but after that, throughout the rest of 2020, rising COVID cases were seen as a positive thing for the stock market, because that would mean interest rates would stay down for longer. But now that we have inflation, that is simply not the case, because people are expecting interest rates to go up to combat inflation. If we were to get a really bad round of this, I don't know what's going to happen. I don't think we're going to. I don't think we're going into a lockdown, so bear with me. If that were to happen, they would have to print way more money, provide more stimulus, which would make inflation way worse. And at that point, you really wouldn't be able to combat inflation. And what if inflation does is take down the value of companies' earnings. If your earnings are going to be worth less in the future, it is one, harder to value companies, and the company won't be worth as much in the future. It is pretty straightforward and simple. So this is seen as a very negative thing this time around in July of 2021. It is very different from June or July of 2020 compared to a year later. So keep that in mind. This is the number one thing that is causing fear in the stock market for today. We're just going to give you guys the facts of what is actually happening as far as the Rona, and then move on to the next thing in this video. But it says, after declining for weeks, 7-day average daily COVID deaths have increased by 26% to 211 per day. New COVID cases increased by roughly 70% since last week, while hospitalizations increased 36%. U.S. officials maintain that Pfizer and Moderna vaccines are still highly effective against the Delta variant, but they're only about 56% effective, and I believe the other one is about 60% effective. So not very effective relative to what people had expected or what they wanted to do. So if we do see this get really bad, hospitalizations start to go crazy, and if it's a problem for regular people to go to the hospital that aren't Rona patients, then that is where you'll really are likely to see the economy have to shut down and these stay-at-home orders to come back into effect. I don't think that's going to happen, but just the thought of that, the thought of rampant inflation and more stimulus checks are shaking out investors. But on top of this, we did just see China cut the RRR rate, which is the reserve requirement ratio, which is sending you a huge red flag that the Chinese economy is starting to slow down. And they were the first to get rid of the Rona. They were the first to recover. Now they are the first to see their economy slowing down, and this stock market is propped up on tons of future expectations for future growth in all of these companies. So once that expectations or those expectations start to come down, that's where you're going to see a lot of trouble in the overall markets. But as we do know, hedge funds, institutions, or even regular people, they are not heeding these warnings. For the month of June, we are seeing margin debt in America approaching $900 billion, currently at $861 billion. That is a huge number. We are looking at a deleveraging situation, and what is going to happen during that deleveraging situation is these shorts in a lot of stocks, but particularly in AMC, they're going to have to cover their short positions. But also in America, we are seeing JP Morgan saying that they are doing intraday margin calls, as well as Wells Fargo shutting down all personal lines of credit. This is a huge red flag as well, that these banks are indicating that we are going to see a crash or correction, as well as, I cannot leave this out, Goldman Sachs just said they liquidated 25% of its entire investment branch. So that means a lot of money is being taken off the table right now and is likely to have a huge impact on the margin debt, whereas hedge funds and institutions are highly over leveraged. We've seen this with Archegos, and at the same time, analysts, other banks, they were saying this is happening with other hedges and institutions as well, not just Archegos. So when it does come down to it, I think the AMC short squeeze will kick off with the overall stock market going into a deep crash or correction. These are only my opinions. I am just sharing my insight and knowledge into this situation. So if you guys like what was provided to you in the video, make sure to hit that like button, as well as comment down below. Let me know what you think about this situation, and subscribe to the channel if you are not already. And if you guys want to get totally free stock, check out the link down below in the description for public. No deposit necessary, no need to link a bank account, and it only takes about 3 minutes time to get your free stock. So make sure you guys do that, as well as if you guys want to sign up with Webull, deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 a piece. And if you guys want to be notified every time I buy the dip in AMC or make a trade in AMC or any other stock, whether it's a day trade, swing trade, or longer term trade or investment, check out the link for the buy and sell alerts. But with that being said, I will see you guys in the next video.